This morning, we've been joined in the studio by the country's Minister of Trade and Industry, Engineer Edward Hinga Sandy. And he is here to discuss his ministry's activities, plans to boost the nation's economy, and the importance of signing trade agreements, among other things, with the recently launched Arise IPP industrial zone in the country. Good morning, Mr. Minister, and welcome to Wake Up Solid.
Good morning.
Now, if you're to give us a baseline as to where we are, especially in terms of industrialization, where would you put the nation?
We're still developing. I mean, we missed out on a number of opportunities. The leadership which we've seen in His Excellency has seen us come up with policies and certain reforms that has given renewed hope to and confidence to our investors who want to come. They've looked at manufacturing, they've looked at broadly supporting industrialization, supporting contribution of manufacturing to GDP as one area of investment. And if you've seen over the years, we've been going around the world. We've held a number of investment conferences. We've been to Qatar, we've been to the UAE, we've been to Morocco, we've been to a number of countries. We've gone to the United States. We're in the UK the other day. And you've seen that from all of these trips that we've made, there has been so much impact on how many investors.
Because I was just going to ask, that's the take. We see them just visiting, attending conferences, and we've not been able to see the impact. So take us through what we've been able to gain from those conferences.
Let's take a look at some of the things that we've been able to achieve. I mean, if you take a look at what we've done with India, I mean, we entered into a trade agreement with India, and now Sierra Leone can actually export into the Indian market once it's made in Sierra Leone, duty-free, quota-free. That's one big achievement. And because of that, you've seen strengthened relationship between us and most of these other countries that have got experience with industrialization. Today we have huge Indian investment. We have one company that's now going to be recycling scrap metals into different kinds of steels and also coming in
country.
Yes, in country. I mean, they've gone very, very far. I'm sure in the next 2 or 3 months, they should be able to be producing the very first steel in Sierra Leone. And we're looking at a number of other things. Another is also coming to do plastics, construction plastics, as well as looking at steel. And what is more interesting is, for the first time, this company is also considering looking at how we can extract iron pigment from iron ore itself. So broadly, while we were doing all of these engagements, the policy reforms that we needed were also done. We have revised our industry policy, a very old document that has lived for years on the tables and nobody had touched it. In fact, the reason why Ministry of Trade had mainly remained a Ministry of Trade is because there had not been the vision to see how we'll move along industry as well. So revising the industry policy and also doing the special economic zone policy are all these policy reforms that have put together the preparedness of our country to be able to bring in investors. Most of the investors that come, they come with huge capital. And when they come with this huge capital, they want policies that will support them, give them certain incentives. And putting all of that together sends a clear message that this country is ready for investment in those areas. So you'll see what we've been able to do even recently with the very first economic zone or industrial zone that we've been able to establish in Koya area. That was done when the people came, they saw that we had just finished the industry policy, the special economic zone policy, and they saw it was very attractive, and they engaged government. We entered into negotiations, and now that is going to roll out. We're talking about over 60 factories that are going to be established in that industry zone. So no matter what you look at, the key thing is there are 7 things that have been undermining the economy. One is that we've not been able to produce what we consume. And because of that, our reliance on what comes from other countries. I mean, whenever there is any global shock, our response has always been from a weak point. I mean,
and as you put it that way, it brings us to the part of, again, industrialization. There's a trend in Africa, trade between Africa and the rest of the world, but with industrialization. A lot of the raw materials come from Africa. It's about getting them and exporting. Now Africa is moving to that part where it's not just to get the raw materials and export, it's also to establish factories in the continent where, of course, that contributes towards the job creation of people in those countries where, you know, the industries are created. How is Sierra Leone tapping into this and fitting into that picture?
Well, part of even the formation of the African Continental Free Trade Area was actually the rationale that Africa needs to trade with each other. You have rightly mentioned, most of the raw materials that are used in industry come from Africa. But when you take a look at how much Africa is trading with the United States, it's big. How much Africa is trading with China, it's big. If you take a look at the data on how much we are really trading with each other, it's always very, very low. And in most cases, what we really trade is something that's produced in other countries. So that is why when we came together, I mean, the structure that was formed, and Sierra Leone is a signatory to that agreement, the African Continental Free Trade Agreement, is looking at how we can really explore the potentials of Africa and see how we can trade with each other. So you've seen how far we've come. The agreement has passed. Trading has started. We're supporting SMEs. We're supporting African-owned SMEs to go into conglomerates to start to see what they can do with manufacturing, what they can do with services, because we're not only looking at trading goods, we're also looking at trading services. So all of this, I mean, the negotiations that Sierra Leone has been part of, the national preparation, I mean, we developed the national trade strategy specifically in response to the opportunities which the African continental trade has for Sierra Leone, and how we prepare ourselves. And all of what you've been seeing us do in the last 3-4 years is actually preparing ourselves, because at the end of the day
we do have these policies, you know, intercontinental. We do have these policies, and locally in Sierra Leone, you know, we do have some producers. Sierra, for example, Sierra is producing not only water, they do the juice, and now it's also on exportation. And we've oftentimes spoken about how, you know, the impact of the leone versus the dollar or the pound sterling contributes towards the fact that we're not exporting. But now we have some of these businesses growing as industries, manufacturing locally, and are at that stage of exporting. But regardless of that, the treaties we sign, the intercontinental trade, it's still a challenge. In as much as there are those treaties signed, trading within Africa is still a big challenge. What is Sierra Leone government doing to sort of chip in and probably give, you know, a smooth transition for Sierra Leoneans to export their products and services out of Sierra Leone within the continent, tapping into those treaties we've signed?
So what we've not been able to do in the last 200 years or so, when industrialization started, is actually what Africa is trying to do. I mean, even if you have all the factories manufacturing, the logistics also comes into play. So now, some of the agreements we're doing with our neighboring countries, we have a trade agreement with the Gambia, for instance. Gambia needs a huge amount of basalt, the granite stone. Mm-hmm. We went to the Gambia, we had a trade agreement, we actually engaged in a number of negotiations and look at how that could be made possible. And we've seen how a businessman in Sierra Leone is even providing a boat that is loading basalt to the Gambia, to look at how we can also export processed timber to the Gambia, to look at how Jolax, that is now manufacturing vegetable oil here as well as soap, to be exporting into the Gambia. And we're doing the same. Of course, our neighbors, Liberia and Guinea, we are seeing what we've done. I mean, there has been increased trade between Sierra Leone and Guinea, increased trade between Sierra Leone and Liberia, and we're taking it beyond that. We're looking at how we are able to affect other countries that are looking at certain raw materials in Sierra Leone that they can also use to develop their factories, and how we can also source those raw materials from those countries to come into Sierra Leone. So a lot of breakthrough has been achieved. It has started, maybe you could say it's at a small scale, but once the business has started, you can see how it starts to build up. And we're only encouraging more and more Sierra Leoneans. And that's why the policies that we're talking about are actually one that will create those incentives. We're giving tax concessions to companies that wish to come and establish factories and invest in excess of $10 million.
Even at that, intercontinental trade, there's still the challenge between smooth trade between Anglophone Africa and Francophone Africa, and probably getting a smooth transition could also require some, diplomatic engagements between the governments. I recall you were at the Afreximbank Sierra Leone Trade Roadshow. Obviously, your ministry and the team put that together. And there was a gentleman who was, concerned about how his goods were exported to a Francophone African country, and something that was supposed to last probably a week has taken over 6 weeks. And he was complaining bitterly that it's not just a one-off thing. There's mostly that challenge between trade from Anglophone Africa to Francophone Africa. Now, with diplomatic relations, how do we capture those? How do we get, these other African countries to be not just aware, because the government signed these treaties, so they're aware, but to trickle it down to where even border security units can be able to get that understanding that we have these treaties and let's allow the treaties to run smoothly.
So, non-tariff barriers remain very big challenges to trade within Africa. But like I told you, we've just started. You've seen maybe that person was making the very, very first export to the other country. But there has been tremendous improvement. Not only the diplomatic, even with the trade engagements. We also have bilateral trade treaties with some of these countries. And we're looking at how the implementation management or the implementation mechanism could be set up to ensure that all of these challenges that you have in some countries police borders police checkpoints across the countries, and it makes it difficult for people and goods to move smoothly. You've seen when the new regime came, even though it's a military regime in Guinea, they succeeded, after all the engagements, they succeeded to get rid of a number of checkpoints. In Sierra Leone too, on our own side, you've seen, except if there is a security threat, but you've seen how the police has been able to help to remove a number of these security checkpoints. The other day, even when we had COVID, and there were a lot of interventions along the way, people looking at, we do not want people to be moving across with the virus. We saw how the trade ministry worked with NACOVAC to see how we work with them and see how we eliminate those challenges. So, like for instance, a truckload of petroleum products has no business to go stand in a checkpoint for checking, because in most cases, there's only one driver and one apprentice that's really moving with the goods. Once they show that they've taken the vaccine, they should not actually be in the queues. So we were able to engage. So this is just exactly what I'm saying. Across the continent, we know the challenges are there. We've never traded much with each other. We look at each other. I mean, there is this whole idea of territorialism, and most people would want to say, let's try to protect our business or our countries or our local businesses against what is happening in other countries, even though they are trading with other external countries. So what we're looking at is take away the fears, and through these engagements we've been having ministers of trade meetings at both the local level at ECOWAS and at the continental level, and these are some of the issues that come up and we try to trash. And in all of those meetings, we've been able to establish one-on-one relationship with each other. Like I know very well the Minister of Trade in Guinea. I know very well the Minister of Trade in Liberia. And whenever there is any difficulty with trade between the two countries, I easily just take my phone and I'm able to call, and we're able. And there are so many other areas that we also come in to support each other. The other day when Liberia had difficulties with petroleum products, they had to call us, and we had to make a very quick arrangement. We looked at some of the things we can easily do to get the products back into, get the products to Liberia, and we're able to achieve that just through a single phone call. And in most cases, there is also a phone call between the two heads of states, and it makes it a lot more easier for us. So I think, Fabian, the point you're trying to make is really real, and what we need to do, working around it, establishing these bilateral relationships and making sure it's actually focused on trade, mainstreaming trade in some of the diplomatic engagements that we have with countries is very, very important to get rid of some of those challenges.
So Phoebe mentioned, Mr. Minister, the issue of inflation, forex, the exchange rate and all of that. And largely, many would want to believe that the fiscal policy is reliant on what the Ministry of Trade does with industrialization, with trade and all of that. So in terms of exportation, where are we if we're to actually cushion the effect, and what do we import?
We're doing a whole bunch. I mean, there has been huge improvement in our export volumes. And it's not just export volumes. We're looking at value-added export coming from Sierra Leone. We used to export palm oil to other countries. Today we are processing palm oil into vegetable oil. The stearin that's coming there is used to make margarine, it's used to make soap, and we're also exporting the soap. And a number of these African countries are actually receiving those exports. We now have Myro that is looking at making plywood. In fact, if you go along the Mile 91 highway, you see that they're building a very massive facility there that will be looking at how they transform our timber into plywood. For the first time, we've never had any factory that's doing that. And they are not only, they're targeting to meet the local demand as well as exporting. So for the very first time, instead of just sending your wood raw, the wood logs, we're now going to be exporting plywoods. We're going to be exporting other kinds of furniture from our wood. And you also take a look at what I was saying. We used to export our scrap metals whole. We used to export our iron ore raw. Today, you've even seen that the two mining companies, just because of this idea, putting together this value addition concept into work, you've seen that now they are treating the iron ore. Mampa as well as Leon Rock are now actually processing the iron ore they're producing so that they can have at least 65% of the iron ore in what they are really exporting. And beyond that, they too are looking at how they can install a blast furnace that will be able to extract the iron from the iron ore itself. We're looking at a number of other areas, even with our bauxite. We don't just want to export the bauxite raw. We're engaging an investor that wants to come and establish a plant here that will be extracting aluminium from from our bauxite. We're looking at the possibility of doing even diamond cutting in Sierra Leone, the purification of our gold. A number of these engagements are going on, and it's all broadly part of how trade is interfacing with other sectors that are especially in the productive sector, to see how we do value addition to what we have as raw materials in this country, so that we do not only increase the volume of our export, we actually increase the value of our export. And that is really what we need to do. And you can see that through that, we'll be able to offset the balance of trade deficit that we have between Sierra Leone and the rest of the world. We'll be able to increase the actual money that will be coming. And in most of these, as we set up all these exports and as we promote export, we also have the condition that part of what you get from the export should be returned to Sierra Leone. And a number of these exporters are actually complying with it. But when you have this global shock, I mean, it's just like when you have an ocean tsunami. I mean, wherever you go, you're going to be having the shocks. And what is happening in Sierra Leone is truly a result of what is happening globally. You talk about inflation, the United States, if you turn to the television today, you hear that that's a major problem. In the UK, it's a major problem. Sierra Leone being a small economy where we're even prone to these shocks, we're only trying to see what we had not done earlier. How do we now do them to see how we are able to be self-reliant, to be able to produce those things that we consume. We have people who are thinking of coming into this country. I mean, like the president is planning to expand on agriculture in his next term. I think that is one real base that we're going to have to be able to also increase the raw materials that we'll be having. In fact, the industrial IPP that we have in the industry zone that we're setting up is also planning to support farmers to be able to produce certain cash crops, to be able to produce certain crops that could actually be used in the industry zone to do value addition and get some of those things that we easily run to China to buy or easily run to Turkey to buy. We want to see how we produce a number of those things. And I'm not assuring that when all of these things are happening, prices are going to come down. I'm not assuring that at all, because there are a number of other factors, I mean, in production that will alter what you may be even planning. What I'm trying to say is that as we move on, you're going to see that these factories that are coming up are actually going to help to build on our labor force. There's going to be huge technology transfer. There's going to be also revenue that's going to be generated from all of those activities. And I'm very, very sure, continuing with aid, looking at all the prospects, you're going to see more and more Sierra Leoneans also wanting to come, especially those in diaspora.
In terms of monetary value, do we have a projection as to how much the nation stands to realize annually from all of these initiatives, especially the industrialization of some of the things you've mentioned?
There's a growth process. We're in development, and more investors are coming. Imagine what is happening in the cement sector. A year or two ago, we only had one factory that was manufacturing cement in this country. Today, we've done agreements and we've established 5 more that's going to be producing cement. If you go to Hastings today, you're seeing Massem is building a massive grinding facility there. In fact, we encourage them to take them out of Freetown. You also have a new company that's going to be doing another grinding facility in Waterloo. We're looking at how we can also take them beyond Waterloo, depending on how we're able to get them, take some of the raw materials from Freetown, because we don't have any other port for deposit. We're even looking at the possibility of establishing a bulk port, even if it's a small one. They'll be looking at receiving huge amounts of some of these bulk materials that are used as raw materials for some of these industries. So you can see that today, as we continue with all of what is happening, the price of cement remains the cheapest in Sierra Leone. I mean, within the sub-region. If you go to Guinea, we're talking about cement being in excess of $7. Today, Sierra Leone cement is trading at around $6 or less. So you can see that with these progressive endeavors that we're making, with the increase in the investment in industry, with what we're looking at the other sectors, like for instance, what I just mentioned, we also are looking at, initially we used to have huge amounts of fizzy drinks coming from Liberia, from Guinea. Today we have 4 or 5 of those factories now established here, producing fizzy drinks. We have, of course, the health concerns, but the fact is we're no longer taking extra forex to go purchase fizzy drinks. We now have those companies, well-established ones, and they're doing it properly, meeting certain standards, producing them. And as we prepare with all of this, somebody wants to ask, what are you also doing in terms of standard and quality? We've seen what happened just last week. Sierra Leone has been able to obtain the certification body that now will look at how we approve or train people who are into manufacturing to meet certain standards, and the Standards Bureau is doing extremely well. We got support from the European Union to be able to establish that certification body, and it's the first in the Mano River Union, and it's going to ensure that these companies, these manufacturing companies, are able to follow all the standards that are required to be able to even export their products to the other markets outside Sierra Leone. They're required to meet all of those standards.
The companies we already have set up in Sierra Leone, you know, at that point or stage to export, are not the only big ideas we have in the country. When you follow pitch competitions across, you'd get to realize that there are brilliant ideas solving problems, but the challenge comes back to access to capital. The Ministry of Trade and Industry, you do have a good relationship with institutions like Oakwood Green Africa Limited, Afrexim Bank. How can we as a country tap into such institutions to be able to finance these big ideas that can help transform Sierra Leone's economy and facilitate intercontinental trade?
First, locally, you've seen how the government of Sierra Leone has worked with our small businesses. The Munafa Fund is one area that we've been able to really roll out a program that has failed over the years. And what we tried to do was to develop a manual. And this manual was able to look into all of the conditions or the reasons why those previous microfinance programs failed. And today we have one that's running. Government is the sole contributor. I mean, His Excellency, the President, was very, very sure that what we're going to do was going to help our small businesses. And even when he goes on his campaign trails, he will ask, are you benefiting from the Munafa Fund? And it's amazing that you have now big banks that are really working on this Munafa Fund. EcoBank is one of them. We've got a number of other banks that have expressed interest to be able to give out, because government is not really giving out. Previously, it used to be the Minister of Trade who is going to be having the microfinance. Today, it is the financial service providers that are actually interfacing with these businesses, look at their potentials, look at what you want to do with the money, determine how much you need to do what you plan to do, and then they're able to give you the fund. And the interest rate is very low for the first time, a single-digit interest rate, 9%, and we're giving them a kind of holiday. We don't just give you the money with the hope that you start paying the following month. At least we give you a break so that you're able to do the business and then be able to accrue some interest and put it into the business, so that even what you have to be paying has to be part of the capital that you are going to be able to help build up your own capital. So that at the end of the day, when you're able to pay everything, you still have something to continue doing your business. But besides, our plan as a government to look at the support of bringing back the investment bank is also something that we're looking at that is very, very helpful, going to be very, very helpful. When we had COVID, you saw the support which the government of Sierra Leone, through the Bank of Sierra Leone, gave to our our big businesses. These were given, a $50 million facility, which they actually were able to use to support their export. And it was not just those who were exporting finished goods, we're also supporting those who are bringing in raw materials. And you've seen how we've been able to establish, the Ministry of Trade has been able to establish a very, very, very strong relationship with Affecting Bank. This is the second time the Affecting Bank has come here for a roadshow. And you've seen that the impact, currently they are processing close to $300 million for businesses that have applied for the loan scheme. We're looking at what they're even going to do with the industry zone that we're establishing. They are also funding that. We've been able to bring in the African Finance Corporation also into Sierra Leone, funding certain big investments in the country. So you've seen that the relationship is really very, very strong. Nobody less than the one who is actually managing the Anglophone Affecting Bank group that came. And we had a very, very huge engagement. And he has promised that in 2 years, he wants to see how certain loan facilities that will amount to about $1 billion could be done with businesses in Sierra Leone. So government recognizes clearly that the private sector has a big role to play in our economic development agenda. And that is why whenever we have the opportunity to bring in financing houses that will be able to support the private sector, we're always going to clamor to that. I have visited the Affecting Bank itself. The president too, the president of the Affecting Bank was here, even for the launching of the industrial zone. So all of that tells you how closely connected we are with these institutions to see how we can leverage on those relationships to bring in more funding for our businesses.
We have to take some messages, but just before we take the messages, a critical concern at this point, the fact that we're added to the June polls. Sierra Leoneans might be concerned that looking at the practice over time, that, there's going to be scarcity of food. All of these things, so there's this insecurity concern around. What's the level of assurance and what are the plans to ensure that, irrespective of the elections coming and there is this concern of food insecurity and all of that, there will be the availability of commodities in the market?
On the side sectors, everything being equal, we're very, very far. Rice, we have enough rice stock in this country. We had a little problem with flour because there were some logistics challenges, but we now have enough flour. In fact, when there was a seeming shortage in the market, flour went up to 1 million loans. Other people were even buying 1,200,000. It has definitely come down to 700, 800. I think we're also very fine with that. We're also working with our businesses that are doing petroleum importation, and we're in a very, very good situation. We're working very, very closely with them. We're looking at all the challenges they too are facing. And because we've given them all of this support over the years, they are also very, very prepared to see how we're able to ensure that we have enough stock in the country. And we're engaging with other players who are ready to come in with petroleum products. What happens in the downstream has been very, very amazing. We've been able to bring in a number of other businesses into the downstream petroleum product. I mean, there are areas that we've not been able to deal with adequately, but I tell you the situation is far more better. Even those who have been in business, if you take, for instance, MP has been able to reinvest hugely into their facility. Today they have a new gantry. They're looking at how they do new storage tanks. They're looking at how they even bring in other players into their business. So we are kind of safe in all of those. The stocks are good. We've been able to ensure that our engagement with the private sector has been very, very strong, and we're not leaving any stone unturned. We're making sure that as we're moving into the elections, I mean, we should be very, very happy. Just like the Electoral Commission will assure that there's going to be peace, and we hope political parties try to adhere to that. We are actually going to be very, very safe in terms of the stocks that we have.
Let's run through some messages. Jonathan Salon Bobo Sima is saying, President Bio signed into law last week the Finance Act 2023, which includes an imposed minimum alternate tax of 3% of turnover on all companies, meaning regardless of whether a company makes profit or loss, it will be taxed. This is damaging to Sierra Leone's investment reputation. Tax demands for MAT from foreign investors would lead to an outflow of capital. Companies may also have to cut costs or improve its margins, or it will not survive. That means more Sierra Leoneans will be losing their jobs, all thanks to the government.
Joby Bangali Jr. says people should know that industrialization can't be sustainable without good policies. These policies so be good for the government, the people, and up to the employees of these potential factories or present ones. An investor will not invest somewhere where there are no good policies. So we have to know that it's not like an investor should come and establish, just like put a Fana market at Kutown Road Market. Some of these investors go to big financial institutions and take loans, and these loans are granted based on the success that these financial institutions can see and how they also can make profit from giving out the loans.
Ibrahim Ansari is asking, Mr. Minister, why is it so difficult to fix price control in Sierra Leone?
Jonathan Sima says prices of foodstuff have skyrocketed. Electricity supply is at a low. Unemployment rate is alarming. The value of the leone has dropped beyond imagination, and rate of armed robbery is alarming.
There's so many messages. Mr. Minister, what is the cost of a bag of rice, cartoon fish and onions? It's only that. Okay, excuse me, this is not too clear. If you can resend, that would be good.
Alusain M. So says Samuel Dr. Sandy is yet to handle the prices of essential food commodities like rice. He needs to do more. From Alusain So.
People should know that industrialization can't be sucky and sustainable without good policies. These policies so be good for the government, the people, and up to the employees of these potential factories or present ones. An investor will not invest somewhere where there are no good policies. So we have to know that it's not like an investor should come and establish, just like you put Fana markets at Kuto Road Market. Some of these investors go to big financial institutions and take loans. Okay, I think Phoebe, you've gone through that message.
Yeah. Jonathan again says Sierra Leone was recently downgraded to the highest business environment risk classification G. Inflation is currently hovering around 50%. President Bio has no plans and has stopped talking about the economy.
For me, the price of commodities in this country is because of the lack of adequate price control in the country. Yoki Musa is saying. Alus Paisa Tukamara is saying, keep up the good work. No matter what you do in this life, people must talk. If you listen to them, you won't move. Focus on your good. And final messages from Ronald Johnston saying, having a free port will boost the economy greatly because our shipping fees are very expensive and even flights into the country are a headache for many Sierra Leoneans. Can't you consider this an option, Mr. Minister? I think those are the messages that will permit us to run through.
For now.
So, well, of course, we had the Finance Act. You know, as a country, we run a number of programs. And most of the people who are working with the World Bank, the IMF, they try to look at what we're doing as reforms that will actually set our economy in a good stead. And while the act was put together, there were engagements. Even after the passing of the act in Parliament, there were engagements. I have engaged the Minister of Finance on this, but I think it's also worthy to note that we've got businesses who are rogue businesses, businesses that have been in this country and consistently have been declaring losses, and they still are in businesses because for some of them, they really do not want to pay their taxes. So the Ministry of Finance has been struggling with that a whole lot. So I think there are certain measures that have been put in place. Some of those measures are actually cross-cutting. We're engaging, and you've even seen that the NRA is going to have a public-private dialogue with all businesses around how the Finance Act could be implemented. So there is already some level of flexibility on the part of government to look at those that are actually going to be badly affected. But these are measures that have been put in place to see how we're able to curb some of the excesses, especially those that constantly remain to be rogue. You cannot continue to be doing business and do not want to pay your taxes. I think those are some of the things. There are other issues which, even in my engagement that were raised, that in terms of renewable energy, there are taxes that, that is not correct. I had an extensive engagement with the Ministry of Finance on that. But with the issues, the act was rolled out, the president has signed it. We're now going to see how we're able, as a government, to be so flexible, to see how those who are really doing well, to continue doing well. The man who talked about the policy is very, very right. We've seen the previous government try to establish an economic zone just outside Waterloo. It did not work. Why? Because there was no policy. No investor can actually put money into an industry zone or a manufacturing zone without actually knowing that the government has a policy or a law. In fact, even the finance houses that support these investors cannot really give money. They cannot subscribe money if those are not actually supported by either strong policies or laws, or they are not supported. There should be some level of predictability when finance institutions want to engage investors for capital. So I think that's why we worked very hard. It's been a long journey. We were able to engage experts across the world to see how not only developing the policy, to share experience with us, those countries that have been able to do economic zones, and they have been very, very successful. I've been to Turkey, I've been to a number of other countries that have rolled out economic zones, and we're looking at all of what we were able to get to tap into those experiences to see how we make this industry zone a success. And we're not only looking at that one that's been established, we're looking at several others that will be able to establish across the country. We want to be sure that people in their localities should be able to have jobs, to be able to have what they consume, and we're looking at the country's potential. We're looking at what we can do with light manufacturing, what we can do with mineral beneficiation, as well as what we can do with agro-processing. We don't want to be exporting all the things that we've been producing in this country raw. We want to do value addition to it to the benefit of this country so that we'll be able to increase our export value. But beyond that, price of essential commodities, of course, is a major problem. Today, like I mentioned, you go to every part of the world, you have that crisis. Even in Turkey, Erdogan is going into elections. I think one of the issues that is really challenging the economy is inflation. The United States, even as Joe Biden is preparing to go for re-election, I think one of the major challenges is inflation. You go to the UK, it's also there. So it's to tell you that this is a global thing.
As you're responding to that inflation, sorry, let me just chip in one message here from Jonathan Sima. He says Sierra Leone's interest rate is 18.75%, and inflation is a stunning 36.1%, the 6th highest in Africa.
Take a look at what is happening in other African countries. Go to Ghana. Inflation is quite high there. Ghana has been able to, Ghana is a success story, but even with all of what they've been able to do, you've seen how inflation has battered that economy. So as a small country, I think the figures are not, we cannot say we're proud of them, but I think it's to tell you that there has been some resilience in our economic agenda. There's been some level of resilience, and you've seen that what has happened to other economies that have been doing very well in West Africa has not happened exactly the way it has happened there. So I think we need to have a reset, and you've seen policymakers around the economy have been meeting. They've been looking at options. We've been looking at what we can actually do to be able to fix what is happening globally, so that we can ameliorate some of the impact of the global crisis on what is. The United States is even at risk of being downgraded as well as a big economy. So, and the same is affecting China. If you go to if you go to China today, you'll see that prices of goods have gone up. You've even seen that a number of other things that were happening in their favor has also deteriorated. So we're working, and I think the economic team is very sound. We're very, very flexible, and we're looking at all the possibilities of harnessing those advantages that we have as a country and bringing in new things that will be able to change the economic fortune of this country.
Injin, before we let you go, so all these policies, all these strides, for some of the people, it comes down to nothing if they don't see tangible results or significant impact in their earning power and purchasing power. Speak to that.
Well, I think if you take a look at some of what we have physically out there, I mean, for some of these investments, it would take a period of nothing less than 2 years to be able to set up the kinds of factories and be able to fully employ. But you've started seeing the impact. I mean, like I was just mentioning, take a look at what is happening with in Samboya. Sierra Tropical went there, established a big farm and a big factory. Today, the people in that chiefdom, together with other people from other parts of the country, are actually getting jobs. I mean, they are not only working on the farm, they are also working in the factory that is producing juice concentrate for export, and also the pineapple bits which they're exporting to the United States. And one thing that will make you proud is when you go out there and be able to drink pineapple that is produced in Sierra Leone, I mean, proudly. I mean, I think it's one thing that will really hit you. Take a look at the agreement that we did with Sierra Capital. They're now actually processing cacao for the first time into cacao powder, into chocolates. And if you go around the world and see part of what is coming from Sierra Leone, they say this is proudly made in Sierra Leone. I think the impact is also there, and the number of employment there also is really very good. Take a look at what we're talking about. Myro coming here, establishing a factory to do plywoods. The number of employment that's going on currently in my 91 is huge, and there's huge skills as well as technology transfer. I think the impact is also very huge there. And of course, the industry zone that we're establishing, I mean, it's just going to light up that area. I mean, the steel factory that we're talking about, the cement factories that we're talking about, the fact that you're no longer seeing any queues for cement. Cement is in the market sufficiently. Rice is in the market sufficiently. You're talking about, we've been actually bringing in even oxygen at one time, oxygen and nitrogen. Today, that same factory is going to be manufacturing both medical as well as industry oxygen and nitrogen. I think the impact is really there. People are not just seeing them because they are not just visible in the streets, but I think the impact we're having. We came in, this factory that was producing ethanol was about to be shut down. We gave them sufficient support, the ones in Bombaley, Sunbird. We supported them. We were able to come up with a policy and a law that looked at how we encourage our factories that are producing alcoholic beverages to buy alcohol from them. And today they are afloat. They're planting more sugar cane, they're expanding on their facility. Sierra Leone flour mill was going to be closed down. I mean, it had closed down already. Today, the support which government has given them has seen the rehabilitation of all the facility expansion as well as increasing their productivity. I think it's there and it's having huge impact on the economy. We're looking at the cement factories that I have just been talking about, the number of cement factories that we now have, and of course the policy that we have to support investment in industry zones or economic zones is going to create all of the opportunities for other businesses to come and start looking at what we can do in other parts of the country.
But at what point do we begin to see and feel, you know, the tangible results of all these activities? Prices of commodities keep going up. The exchange, the Leones versus the USD, is a problem. At what point do we get to begin to feel and see tangible results?
I think the expectation is really quite high. You want to also say that because prices are going up in the United States, prices are going up in other countries, in Ghana here, in Europe. You want to say that because inflation is going up,
but Mr. Minister,
so they are not
in as much as there's inflation in some of these other countries, in other countries, even in Africa, they're doing things to be able to minimize the impact of it. Take, for example, the Leone versus the USD. In every month, it goes up probably twice or thrice every month. In some countries, it's not the same. There is a period, there's a gap between the increment and the next time it goes up. For Sierra Leone, it's not the same. What we see is the price going up almost every week. In as much as we cannot probably bring it down, but the expectation is that it doesn't keep going up the way it's going up. Have you checked the Leone versus USD exchange rates today?
You truly want to look at what is happening in other countries. Go to Liberia. I will still make reference to those countries. Go to the Gambia. Go to Ghana and see what is happening there.
And if we're making reference, Guinea, very close to us, their currency is doing a lot better now than the Leone.
What we have in Guinea is very different. Guinea has got huge investment. In fact, Guinea is now the biggest mine of iron ore, the biggest deposit in the world, and the biggest investment in iron ore mining is taking place there, and that is a big boost to the economy. But there are also, even while their currency is doing well, there are also very, very huge challenges with the economy in Guinea. It's not that flamboyant as you're saying it. I mean, imagine that previously we used to have products coming from Guinea. Today it's the reverse. You have people coming to buy products in Sierra Leone and taking it to Guinea. So
because back then, when you talk to the traders back then, the Leone was doing better than the Guinea franc. Mm-hmm. So it was making much business sense to buy there and sell here. But now that the Leone is doing worse than the franc, it's making business sense to buy from here and sell there.
So Fabian, we can spend the whole day on this issue of the currency. The truth is, I think government is doing a whole bunch, and those who are in charge of it, the Ministry of Finance, myself, of course, the Bank of Sierra Leone, we're very flexible, looking at policy options that will really see how we're able to address all of this. But inflation is everywhere, I can tell you. I mean, something is happening across the globe that is really causing all of these challenges, that's bringing challenges to currencies. But I tell you, there is flexibility on the part of the policymakers in looking at what options they can actually take to be able to lessen the impact of what is happening.
And in those activities, we've heard the long-term plans with the industrialization, the businesses invited to coming, being poached and all. But is there a short-term plan?
Fabian, all I will say, plus the comments that I've made, I think we have other experts. I mean, I will be happy that you you bring in the Ministry of Finance here that's in charge of fiscal policy, or the bank governor here that's in charge of monetary policy, to really look into the details. All I can assure you, policymakers are really looking at options. There is so much flexibility on the part of government to see how these issues are addressed.
All right. Well, thank you very much. Engineer Edward Hinga Sandy, Minister of Trade and Industry in Sierra Leone. It's been a pleasure having you here this morning.